Good afternoon. This obviously we'll skip through things fairly quickly given the time available, but essentially we're talking about the Arabian-Nubian Shield, the two sides of the Red Sea, in many geological respects analogous to the goldfields of Western Australia, where most of our technical people come from. And the relevance of that is that having lived through the transformation of the West Australian goldfields into the #2 gold producing region in the world, we can see the opportunities for this part of the world to do the same thing. Both Ethiopia, the green thing on the left, and Saudi Arabia, the desert on the right, same geology despite the fact that on the surface it looks quite different. What we're doing here is we've established a platform in each country with top quality partners, and in Ethiopia specifically we've established a consortium with contractors and financiers, with the documentation now having been submitted for approval by the government, which we expect by the end of next month, for then to go into execution and drawdown during the first quarter next year of the first production unit, which is in Ethiopia. So I'll just take you quickly through, mostly talking about going into production in Ethiopia at 140,000 ounces per annum gold. And then as we go into the underground, which is under the open pit, which is bankable today, that would go up to close to 200,000 ounces a year based on that project alone. I'll touch very briefly on the other things in the pipeline, but clearly the main game is to get the show on the road with our first production unit in Ethiopia. On that page, I don't think there's much that I haven't already said, other than the fact that we're capped at around $20 million. So when you see the numbers later, you'll see clearly the multiples of upside that are available to us as we work through execution. The board, most of you, or many of you, would know some of the people on that list. Mark, an experienced mining executive and city person known around the city. Norman was the ambassador to Ethiopia and to the African Union for some years. Ian, geologist, and John Leach, you can meet at the booth here, our booth here, as well as myself. The corporate structure is that in Saudi Arabia we have a family as our partner. They're arguably the #2 family in the country after the royals. They're not staying at the Ritz-Carlton at the moment. In fact, I was there on the very day that all that was announced. I happened to arrive the night before. And I asked the head of the family, I said, what's all this? What does all this mean? All these people held in the Ritz-Carlton. And he said, they'll keep them there until they pay the money back. So he knew exactly what was going to happen before anything was announced about the deals and the this and the that. So maybe it's a local custom, I don't know. But that's what I got the answer on the very morning that that thing was appearing in the papers. Anyhow, to be honest, we wouldn't have got anywhere in Saudi Arabia without the Al Rashids as our partner, and they're very decent people, and we're very happy with that relationship. And we're one of the few people who've got real people on the ground, and we've got a large portfolio there. In Ethiopia, the government is our partner, and by our invitation, they haven't asked to be our partner. We asked them to be our partner. This is the first major mine development in the country. In modern times, and we asked for them to be our partner. We have also the two contractors for that project, small shareholders, but more particularly the contractors, and they've been active in Africa for over 20 years. They're very good at their work. They won international tenders to get that role, and fortunately they come from Western Australia, so we talk shorthand to each other, and they're very good people to work with. Ausdrill and Lycopodium. I think I've mentioned most things on this slide already as to where we are and what we're doing. There is quite a large pipeline, so there's brownfield development coming along behind the startup of Tulu Kapi in Ethiopia. And there's quite a lot of grassroots exploration behind that in terrific country, but time today doesn't permit that. Over the next 2 years, we'll be constructing as well as exploring. So there'll be, action, if you like, on a number of fronts over that period. Most of the people in the development team are from Western Australia. You can probably pick out the guy who isn't. He's our country manager, has been with the project a long time, but everybody else is a West Australian who's been building mines all their life. And Wayne lives in country, the MD lives in country. He has been a developer of gold mines in many countries, particularly in Africa. And we're very much hands-on culture with the guys being at the point, at the coalface, so to speak, not sitting around in corporate offices. Ethiopia time doesn't permit to say much here, but let me say that it's been in the top 10 growth countries of the world for 15 years running, and is here rated by the World Bank as the highest growth country in the world. So when they put their minds to developing a sector, it has worked remarkably well in certain examples. When they developed an airline, it became Africa's most successful airline. When they wanted to develop a flower industry 10 years ago, it's now the number 3 flower exporter in the world. When they want to set about something, they're very serious people, and they want this to work, and that's why they put equity capital into our project. They want this to go because they want it to be like a first cab off the rank type of thing. Right now, we're jockeying the various timetables for moving the community. We have to move about 2,000 people off the site. They've all chosen their land to be moved to. The timetable for drawdown, all the documents have been submitted to the government for approval, which we hope is by the end of next month. For drawdown to take place during the first quarter, for mobilisation of construction from then on. So, if you like, optimising the scheduling of community and construction and finance concurrently, bearing in mind that there's a fixed repayment schedule that commences 30 months later on the project finance component. So we want to hit the ground running, so to speak, as soon as we draw down. Cantor Fitzgerald analogue statistics of what's meant to happen theoretically with the stock as it re-rates as we go through finance, drawdown, construction and so on. You don't have to pull out an Excel spreadsheet to see there's multiples of upside here. The low bar is the current market cap, and all the other ones are various measures of where the stock should go to as things happen. Why is that picture in the financial section? Because that's the ore body. Obviously, making the point that there's not a lot of overburden to remove here. Very busy chart. All in costs about $1,000. That's all in, including capital up front, and all in sustaining costs in the 700s and operating costs in the 600s. So it's well positioned. That's the funding sources and applications, ignoring the 60 million that's already been spent and ignoring the mining fleet of 50 million that's being provided by the mining contractor on a conventional schedule of rates basis. So there's 60 million equities gone in and another 40 to go, half from the government and half from us. I think I've mentioned the growth pipeline, and clearly we don't have time to go through it, but the essential point is that we are putting together drawdown and triggering of construction, and there's a lot of exploration follow-through to do both next to this project and in our other portfolio as we work through construction and start-up over the next 2 years. Thank you.